Welcome to the Impeccable Investor Podcast. In today's episode, we're going to be getting in my two main criteria for picking stocks that can do over 100% plus returns. So you'll learn my two main criteria, which is going to be future use and uptrending. And I'm going to discuss what those are, how those work, and why you should be looking at those. And I'm also going to show you some examples of stocks that I picked in the past so that you can know that I really picked out these stocks. I'm about Plug and Workhorse and other stocks like that went up over 100% after I picked them out. So I'm going to teach you my two main strategies and then how to actually apply that to different stocks. So anyways, let's get into it right now.
Welcome to the Impeccable Investor Podcast. The strategies and secrets you will learn on this podcast will help you profit from the market with ease. Remember, if it's hard, then it's probably not right. Now, your host, that crazy stock guy, Austin Booley.
All right, guys, so jumping straight into it right now, why I decided to use these two criteria, which is future use and uptrending, is because of how I got into the stock market. So to quickly explain, when I got started in the stock market, I learned about Warren Buffett. I learned about long-term investing. I learned about value investing, and I learned to look at the fundamentals, to understand how the company is performing, to judge how a stock should be doing, to be looking at the company's revenue to judge the stock's performance. And so coming from that type of background, I understood the importance of fundamentals. So by understanding fundamentals and more stuff like that, I kind of have an appreciation for looking at stuff that I wrapped up into one word called future use. So that's how I got the idea of future use, which I'll explain more in a second. But then as I started to learn more, I realized that I really liked day trading. I really liked swing trading, and now I ended up on swing trading. And because of that, I learned the importance of looking at the charts, of looking at the stock, of understanding how the stock performs over time. And because I also had an appreciation, or I gained an appreciation of looking at the stock. And because of that, I learned to combine both those aspects, both the fundamental, which is looking at the company, and the technical, which is looking at the chart. So the technical aspect is what I call uptrending. So my two main criteria comes from the history of me learning through investing, through day trading, through swing trading, and they are future use and uptrending. Those are my two main criteria that I look for when I select a stock. So to explain more, future use is all about understanding how well a company should be doing in the future. So what you're doing is you're assessing the fundamentals, or you're assessing how well the company performs based on common sense, based on your idea as a non-biased consumer. So what you want to do is, if you are biased, which means you really, really love a company, then you want to make sure that you step back and make sure you're not too biased. But you want to look at the company and you want to assess, does this company adapt to the current market situations? For instance, in this world right now, has it found a way to adapt with COVID? Has it found a way to make more profit during the pandemic and other stuff like that, right? You're looking for a company that knows how to adjust, that knows how to move, that knows how to kind of like move with the market. And so that's our first aspect of future use. We're looking for a company that has a future, a company that is constantly improving. So let me explain the importance of this. We had companies in the past. For instance, we're going to start off and use Blockbuster. Blockbuster was a store, for those who know, that you could go into the physical store, rent a DVD, go home, put the DVD into your DVD player and watch it, then return it when you're done. Think of Netflix, but a physical version. And because of this, they were all physical based. That allowed Netflix, which is all online, to infiltrate this space, to infiltrate this market. So what we noticed is that while Blockbuster was seeing that Netflix was taking on customers, was having more and more success as computers started to spread across the world, as we started to have smart TVs and all these things, Netflix definitely picked up a lot of speed. And what did Blockbuster do? They decided we're going to stick with a method that works, which is the current method they're using, their physical DVD method. And because they stuck to that, they were showing they had no commitment to future use. They had no commitment to the future and how the market was moving. And because of that, that led them to going bankrupt and going under. I believe there's only one Blockbuster left in the United States, And that's because they did not learn how to adapt. They were not future use. They did not look forward, and they were not progressing. One more example is Sears. So Sears used to be an appliance type store, almost like a mini Walmart. And for those who are wondering what Sears is, it's because they went out of business. They realized that they were focusing on small appliances when in reality they could have been focusing on what people wanted. They wanted a one-stop shop for everything. So that's why Walmart won them over. Not only did Walmart have small appliances, they also have crafts, food, furniture. They have everything you want. Walmart's become a one-stop shop. And now we have to also look at the future use of Walmart. Is Walmart competing with Amazon? Because now Amazon is becoming the competition. So before you invest in Walmart, your future use assessment of that is Walmart actually adapting? Is it pushing internet stores and all that? And my answer as of right now, which is September 1st, 2020, is that yes, they are doing so. They are starting to roll out Walmart Amazon Prime type version where they have 2-day shipping and some other stuff like that. They also put in a bid for TikTok, so they are improving in the social media space. So that is how I assess future use, which is my first criteria for looking at stocks. Now, my second criteria for looking at stocks is more of the technical side, the stock chart side, and that again is uptrending. I just summed it all into one word, and uptrending. So why I said this word is because when you invest your money in an asset, what you're doing is you're looking for that asset to increase in price. So to put this in words of real estate or a house, when you buy a house, you're looking to buy it at a cheap price. And then over time, you're looking for the house to increase in value so that when you sell it, you can make more than what you bought it for. That's the same exact thing as a stock. A stock is an asset. So what you want to do is you want to make sure that stock you're buying is constantly increasing in price. So for those people who constantly look at solely the fundamentals, and they're like, okay, so this company should do great because the fundamentals are awesome. And then it doesn't because they're not looking at the stock chart. You want to see when you pull up a stock chart, whether that's on tradingview.com, yahoofinance.com, your broker, wherever you do that, you want to see the stock chart going from the bottom left-hand side all the way up to the top right-hand side. You want to see the chart over time going steadily up. And when you see that, you know the company is a good company. So you know that you assess that this company has future use, and then you'll also assess that the stock does well. The reason being is because the market has access to information. The market has access to all the news of the company, all the internal news, all the internal operations. They have access to all that. So if something was wrong, the stock would not be continually going up. We have measures set in place. Now, there are people who will argue that, Austin, the markets aren't as efficient as you're saying, but we have to assume that with the rules and the laws and the regulations set by the SEC, the banks, the Federal Reserve, that the money supply is in control. The companies are in control. The reporting is in control. And so we can assume that everything is safe and that the market is efficient. And when I mean that the market is efficient is that the stock chart lines up with what the company is doing because people are not lying. Again, that's an assumption that we're saying. And also, if there was something wrong to be found about the stock, we would have found it. Guys, we have Twitter, we have StockTwits, we have Reddit, we have Quora, we have all these forums, all these sites, Instagram, all these places that if something was really wrong about a company, we would know it. Investors would be speaking up about it, and we would be seeing a turn down in the stock price. So I wanted to say uptrending to say if the stock is continuing up in price, that is a very good company. Let me give you some great examples. Microsoft is a great example of a stock that continues up over time. And what do we know about the company? It's a great company. Another example, Visa. Visa accepts online payments. Online payments are being taken every single day, regardless of a pandemic, COVID, whatever is happening. That stock continually goes up, and it's a great company. We also have PayPal in the same industry and space as Visa. So all these things are stocks that are uptrending well, and the company is also performing well. And that's just how it works. So that should be your second assessment of uptrending. So again, guys, when you're looking at stocks, you want to make sure you assess both the fundamentals, which you should do from a non-biased, common sense approach, which is your future use assessment. And then you should also look at the stock price over time, which is the uptrending assessment. So also to discuss this more, I wanted to give you some examples of stocks that I've called out in the past. So on my Instagram, I've called out some amazing stocks like Plug and Workhorse that when I called out went up over 100% in the next 6 months. And so I always get the question, Austin, how did you know those stocks were going to take off? Austin, how did you know those stocks were going to perform so well? And so I wanted to break that down. Now that you know what I mean by future use and uptrending, let's get into those stocks. So I'm just going to explain them in general because they both worked out the same way. So when we look at future use, we're looking at companies that will perform well in the future. And when we're looking at uptrending, we're looking at companies in hot sectors. So Plug and Workhorse were in hot sectors. What I mean by that is those sectors were in uptrends. Those sectors were performing well. And so what I was looking at was I was looking at sectors that are uptrending, which means sectors that are moving higher, and also sectors that have a lot of future use, right? And in addition to that, I was looking for the hottest stocks in the market. And what I mean by hottest stocks, I was looking on Twitter, Reddit, wherever, for stocks in those sectors that were being talked about the most, because hype does play a lot in trending and a lot in stock selection. So because of that, I kind of pinned together that Workhorse and Plug would make two amazing stocks. These sectors are performing well. These sectors have future use, and these are hype stocks. So combining that with my trending band indicator, which I explained in basics number 5, why trend investing is essential. So if you want to learn more about that, you can listen to podcast episode number 6, or you can click the link below to my free web class on it. But when it broke above the trending band indicator, then I knew it was time to buy. And so that's when I alerted it, and boom, we had that huge spike up. So guys, it's all about finding stocks that follow future use, they're uptrending, and they are above the trending band indicator, meaning that you're following the trend. All right, guys, thank you so much for listening to this podcast. I look forward to discussing more with you next week. And next week, we have an amazing episode that I'm super excited to share, which is how presidential elections affect the market, or how the market is affected by presidential elections. So if you want to know the stats on what's going to happen this year in this election, then you're definitely going to want to hit the subscribe button on this podcast to get alerted to next Thursday's episode. Thank you so much for listening to the Impeccable Investor Podcast. See you next Thursday.